Hi guys, welcome back to Investor Prime TV. If you're new, this channel is a one-stop shop for investment ideas and trading ideas, how to trade the market, learning how to trade the market, the tools to use, and most importantly, when to get in the market, when to get out the market, and how long to hold your position for. Make sure you hit that subscribe button and the notification bell so you don't miss any further uploads or consistent content like this. Because trust me, I promise you, you'll learn a thing or two, to help you be a better trader. So in today's video, I'm going to go through Tesla, Tesla stock analysis, because as we all know, Tesla has been making some serious moves this year. 2020 has been Tesla's year, without a doubt. You know, they've just been making crazy moves, move after move, just when people think the Tesla stock has overextended, the stock price has overextended, it keeps going higher, making bull flags after bull flags. So without further ado, let's get into today's video. Hey guys, so we're doing yet another analysis on Tesla. Tesla is by far one of my favorite stocks this year. By the way the stock price has been rising, I kind of get a feeling Elon Musk has been wanting to buy something very expensive by Christmas or for Christmas, and he's just been pumping the stock, getting the stock rising. Nah, I'm joking, of course. Basically, as a company, Tesla has been performing, doing very well, which is why the stock price has been rising, and it continues to rise because we're currently still in market hours, and the stock is already 2% high, Gonna discuss basically my plans going forward. As an investor, some trade ideas that you can adopt or incorporate into your strategy that will definitely help you, at least make sense of what's going on in the market. That's what I aim to do. I aim to help you get a different perspective on the market or confirm your perspective on the market, like your trading strategy. All right. From previous videos, I've had like ascending triangles, etc., falling down to there, which Tesla, the stock price has broken, it's broken the resistance and it's continued to move. So basically, as an ascending triangle, once the resistance is broken and it stays broken, then this can be seen as a breakout strategy, or you can adopt a breakout strategy for this, and there's bound to be a lot of momentum following that move, you know. So as an investor, you can definitely use that as a secret weapon to your trading. Basically, the bulls have continued to take control, all right, raising the price all the way up to 585. I had my major resistances at 500 and about 462, okay? So in the previous video, I mentioned that these have effectively turned into support zones for myself, so major support, okay? And you can also use them as major supports in your trading, all right? If you're looking for key pivot points, key support or resistance areas, then I would advise definitely use 500 and 462 as your major supports, okay? Because if the price, the way Tesla stock price has been moving, if the price retraces back to 500, all right, or 462, then you can have a lot of confidence in that it's gonna bounce back and continue rising from these points, all right? So these are key points that I'm using for myself, and you can also adopt in your trading, all right? So basically, these are my support zones, all right? So I'm going to go ahead and remove the ascending triangle, all right, because it's no longer valid at the moment. So I like to keep my charts clean, all right? So that way I don't, get confused, get lost in the sauce, like it's clean. So I advise you can do the same, as a trader, especially if you're new to trading, and you're just looking at charts for the first time, etc. You're looking at Tesla for the first time, I advise you keep your charts clean. Okay. In today's session, it's gapped high, all right, or it's gapped up. So basically, a gap is common with stock trading, all right, because there's only 8 hours a day of trading, and then they take a break during the night, and then they do the clearance, etc. So the next day, there's usually a new price once they've done all the clearance and they've got all the orders in, etc., overnight orders or wherever, after market hours orders, so there's bound to be a gap up or gap down, especially if there's a strong move up or strong move down. You tend to find a gap following those moves. All right. Just like here on the 23rd of November, the close, on the 24th of November open, there was a gap up, because it had just broken this key resistance. All right. So there was a gap because there was so many buyers in the market. There was so much demand. All right. So there was a gap up on today's session on the 27th of November. The bulls tried to bring the price up to like 600, but the bears, by the looks of things, the bears are actually bringing the price back down, or have brought the price back down. There's 2 more hours in today's trading, or an hour and 40 minutes left of today's session, and the bears have brought the price down. Looks like it might close around here. So what I believe is happening now is that there's going to be a retracement. Basically the bears are going to bring the price down to a certain value, okay? And then I'll show you exactly which values I believe it's going to come down to. But I believe the bears are going to bring the price down to a certain value, and just by looking at the chart, the reason I believe that is that there was a strong move on the 25th of November's trading session, and the bulls pretty much closed fully in control of that session. But this session, the bears are starting to take control, okay, or at least bring the price back down. By the looks of things, there's going to be a shooting star candlestick pattern emerging. All right, so basically what I'm going to do now is, I know my support zones, okay? So just to keep my chart clean, I'm going to remove these support lines. All right? Keep it clean. So at least you're looking at one thing or two things, maximum 3 things, So keeping it clean, okay? So let's say the bears, all right, the sellers take over this session on the 30th of November, okay? Monday the 30th of November, all right? And there's a bearish close, i.e. a red candle close, okay, then what I'm going to use right now in terms of looking forward, okay, is a Fibonacci retracement tool. Okay, this is one of my favorite tools to use, if not the favorite tool. So the reason I really like the Fibonacci retracement tool, and I advise that you at least have it in your toolbox, basically, it's a secret weapon for traders. I guarantee you that, okay? Now, the reason for this is that whenever there's a trend, okay, and this is a beautiful trend, okay, so once a trend has happened, all right, it usually retraces back to a certain value, okay? So if it's a trend up, then the bears usually retrace the price back to a certain value, i.e. lower the price to a certain value, and then it continues. In technical terms, this is called a dip in the trend, okay? So now Fibonacci retracement tools are great for identifying how far this dip is likely to go and when the bulls are likely to continue the trend. If it's an uptrend, or bears are likely to continue the trend if it's a downtrend. All right. So let's go ahead and draw the Fibonacci retracement. All right. All the way up to here. If I just remove that so I can get. Okay. So that's the Fibonacci retracement tool. Basically, the way you draw it, if it's an uptrend, then you always start from where the trend has started. Okay. So you start from this point, roughly $400 in this case, and go all the way up to the peak, i.e. roughly $600. Okay. Now, what I'm looking for now really is my 38%, my 50%, and my 61%. Okay. Those are going to be basically my estimated supports, or prices where the price is going to retrace to. Okay. Now, the 38%, which gives me $522, okay, the 50%, which gives me the $500, and the 61%, which gives me $477. All right. Now, the reason these are key, okay, is it's the way the Fibonacci retracement tool works. Okay, it's made up of mathematical figures, all right, and percentages that are significant. Fibonacci did the mathematical equations, etc. I'm no mathematician, but he came up with these numbers, all right, these ratios. So or these percentages, 38, 50, 61, 23, 78, etc. All right. But with traders and investors, the key values are 38%, 50%, and 61%. Reason for this is these are values that, or areas that the prices are likely to retrace to. Okay. Now, this is why you should, or you could have this in your arsenal or your toolbox, and it will definitely help you get a better understanding of the market and what's going on. All right. Now, my supports are 52 or 522, 500, and 477. All right. So now I've drawn my Fibonacci retracement tool. Okay. I've come up with my supports. All right. So I'll go ahead and delete them. So what I'm going to do now is, or first of all, actually, as you can see, these supports are key, because they're actually very close to the 500. Actually the 500 is my key support. All right. So you understand why I was saying that that's my key support. And the 477 is close to 462, another key support. All right. So basically what I'm doing now, you know what? I'm going to draw, I'll just add the 23 line. Okay. So I'll just add an extra support. So this is going to be pretty much this is going to be a light support for me. All right. So these are going to be my main support areas, the 38, the 50, and 61. All right. With the 23 being a light support. So what I'm going to do now, looking ahead, is I'm going to wait to see, first of all, if the price actually retraces back to these values, and if it does, what the price actually does at those values. Because a bit of advice, just taking this advice on board would help you see much better results almost instantly. Okay. Let the market tell you what it's doing. All right. You don't tell the market what to do. The market is going to do what it does regardless. All right. So you need to let the market tell you what it's doing. Okay. That's why I'm going to chill. I'm going to relax, wait to see what the price does. If the 30th of November session comes and the bulls continue that rally up without any bearish influence in the market, then that's cool with me, But let the market tell you what it's doing. Okay. So right now, I want the market to tell me, look, I'm lowering the price. The bears have come in. The bears have stepped in the market, and they're about to do some serious damage, and keep the price going up. So I'll wait to see, okay, the price gets to 550 or 551. Okay, if that support is broken, I'll be like, okay, let's see what it does at the 38. If that support is broken, I'll be like, okay, let's see what it does at the 50. But if the 50 actually turns out to be a good support, then I'll have confidence that, okay, you know what, it's going to go back up, And the Fibonacci retracement tool, it doesn't always get back to the top end, all right, the peak. Usually if it gets down to 61, it usually goes up to 38 or the 23. And then what it might do is it might retrace back down, it might go up, or it might come all the way down to, the 61. All right. But the good thing about the tool is at least or you can guess with a good level of accuracy that the price is going to rebound or retrace at these values. That's pretty much my take on Tesla for now. And I'm just going to wait to see what happens on Monday. All right. And then from there, I can adjust my position or not. But so far, I'm really pleased with Tesla, And if you've been following Tesla, I'm sure you're also pleased with Tesla as well. So if you enjoyed that video, guys, make sure you like, comment, and subscribe, show some support. So most importantly, so I know that you're benefiting from my material and you can help me out with leaving a like, a comment, a subscribe if you're new. All right, thanks guys. So I'll see you guys in the next video.